All right, good afternoon, everyone. Testing 1 2 3. Testing 1 2 3. Can everybody hear me? Testing 1 2 3. Sorry about that. The small delay there. Had some trouble accessing my mic. Can you give me a 3 in the chat if you can hear me loud and clear? 3 in the chat if you can hear me. Make sure my mic is working. All right, testing 1 2 3. Testing 1 2 3. All right, audio visual check. Audio visual check. Testing 1 2 3. Type a 3 in the chat if you can hear me. Hello, hello. I have the right time. All right, there we go. All right, sorry about that. All right, thanks guys and girls. All right, let's go ahead and get started. We're a couple minutes late, so I apologize about that as my own technical difficulties. So it is 4:30 p.m. Eastern, 3:30 p.m. Central, my time. I know you're ready to get started. We don't want to waste any time. Welcome. You are here to see my mechanical done for you strategy, any market, any time frame. We did a presentation last night. It was well received. Got a request to do it again. So this is a special presentation that we're holding this afternoon, and one that I really, really enjoy, truly enjoy doing a presentation on. Why? Because it is something that I use every day. And in fact, if you stick around to the end, I'm going to show you some trades that I closed out today, trades that I made in live accounts, and we'll also take a look and see what the market did on certain symbols and different time frames, things you want to see using the strategy that I'm going to teach you today. So my name is Silas Peters. I'm a founder, head trader, seasonal swing trader. Looks like we have a good clearance on the audio visual. Welcome PT and John and Larry and everybody else. And let's go ahead and get started. So how's everybody doing today? Before we get started here, we must take a quick moment and read our famed risk disclaimer as required by our attorneys and regulatory governing bodies. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. You can lose money in trades. So I know we all know about our risk disclaimer, but it is very important. So please make sure you understand that and pay attention with any capital that you choose to trade with. So I'm going to go ahead and introduce myself again. My name is Silas Peters, and I am standing in front of my alma mater there at the University of Alabama with my two beautiful blonde-haired girls. And I think that was a spring game, actually. That's the kind of games that we typically like to take them to at that stage, because I don't think we lasted to halftime. But so I'm standing in front of my alma mater, and basically 3 days after I graduated from the University of Alabama with degrees in investment finance and economics, I sold my car. I packed up my small belongings, rented a car, and drove to the Windy City, the great city of Chicago. Did that 3 days after I graduated, and that is where I began to cut my teeth in the commodity markets, working at the Chicago Board of Trade. And it's here where I was bitten by the trading bug, and I never really looked back. So while there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, and European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, large four spec traders, and the like. I've also been a part of building and managing several futures and equity brokerage firms. I've worked as a private family office investment consultant. I hold or have held these various futures and securities licenses. And then in 2016, I launched Seasonal Swing Trader. So that's enough about me. Let's talk about you. Does your trading desk look like this? This is actually not my trading desk. I found this on the internet. I thought it was funny at the time. May not be funny. Now, my desk did look like this actually when I was working in Chicago on a trading desk for obvious reasons. Didn't have all the fancy colored charts and squiggly lines like that. But my point is that it does not need to look like that. My trading desk does not look like this. I do have half a dozen monitors dedicated for scans and charts and quotes and things like that, and then the rest more operational type stuff. But the point is that we do not need that. You do not need all of this jargon going on. All it is going to do is confuse you and put a halt on your process of making decisions. But I feel like a lot of people perceive that this is what trading is, or what we as traders do. Hell, my neighbors and probably 3/4 of my family think that this is what my office looks like or what I do, but it's certainly not the case. It's just not necessary. So sticking with our theme, it's going to be just keep it simple. The old KISS analogy and paralysis analysis. So raise your hand or your digital arm if you are a victim or have been a victim of paralysis analysis. I know I have. I am raising my hand. It's a state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. So who's been struck with shiny object syndrome, chasing shiny objects, looking for the next whiz-bang widget or indicator? I bought a ton of indicators over the years, and you know what? They end up sitting in my settings or whatever, and then they end up being removed and just clogging up desk space. So I'm going to teach you a very simple and mechanical strategy that works on all of these markets. So I appreciate your participation so far. What does everybody trade? I like to see who I'm talking to. You trading stocks, options, futures, forex, maybe even cryptocurrency. I trade all of the above with the exception of cryptocurrency. So I actively trade stocks and ETFs, options, futures, and forex. I am invested in Bitcoin and a bunch of obscure cryptocurrencies. Don't even know what the hell they're doing, but or if I can even get into those accounts anymore. To be honest with you, I just don't check them. I do monitor Bitcoin, just because it's in the news, but I view it more as a lottery ticket. But the point is that what I'm going to share with you works on all markets. So a lot of stocks and options traders, futures only, forex and crypto. I don't see too many crypto players in here. So stocks mostly, stocks and options. Cool. So a big diverse crowd, and that's what I usually do expect to see. But again, just trying to hammer in the point that it works on all markets. So what I'm going to share with you today is highly accurate, it's profitable, it works in all markets, which we just covered, all time frames, and it's about 99% mechanical. So most importantly to me is that it's simple. I like to keep things simple in my life when I can. So my agenda and promise to you today is we're going to learn a simple mechanical setup that is repeatable regardless of the market or time frame. So I'm going to ask you some point during the presentation, have I fulfilled my promise to you? And I hope that you will answer a resounding yes. If I haven't, I have not done my job. Speaking of promises, you may have read or seen something about the $10,000 trade promise if you're here. Well, look, I don't promise anything in trading. I certainly don't promise it in life, but these are trades that we talked about for weeks and weeks, if not months, in front of multiple free presentations, as well as in our paid membership services, about what we thought were very high probability setups. And you can see that these are not hindsight, not after the fact. These are markets that we called in real time. And you can see, I don't know if you can see the symbol, but it's crude oil, unleaded gas, and we also did a trade in nat gas. They all reached the $10,000 trade objective and then some. We also talked about sleeper markets in coffee and orange juice in particular. What you see here in these lines are 5, 15, and 30-year historical price averages. So you can see over a very long historical amount of time what those prices have done. That's a very good indication of what future price may do. It's not a guarantee. It's strictly an indication of what price could or is likely to do based on various times of the year. It's called seasonality. And you can see here at these particular times when we talked about these in free presentations that the markets look like they could be bottoming. And when we went to a daily chart and weekly chart, that's exactly what they were doing. So we were kind of primed, waiting in the bushes for that very specific mechanical strategy that we're going to talk about here in a few moments, and we pounced on them. And what happened? They ended up moving $6,000, $7,000, $8,000 per contract and then some. You can see exactly what happened in coffee and over here in OJ. We also talked about corn, soybeans, and wheat. You can see right here, we have a little window of time based on 5, 15, and 30-year price analysis that they were bottoming out at this time. What happened? They ended up moving over $5,000, $6,000, $7,000 plus per contract in corn, beans, and wheat. And these are the kinds of setups that happen over and over again with the strategy that I'm going to share with you today. So who is ready to see the setup responsible for the equity curve below? Basically, since inception, really needs to be updated. 2019 has been a stellar year, but this equity curve is responsible only from the one setup I'm about to share with you. And it's the 1, 2, 3 pattern. So who here is familiar with the 1, 2, 3 pattern, also referred to as the 1, 2, 3 top or 1, 2, 3 bottom? I would be surprised if not 100% of you are not familiar with it. It's one of the most fundamental technical patterns in the books, Technical Analysis 101. I didn't invent it, so I'm seeing pretty much yeses. I see one no, actually see 2 no's, and good. So a lot of you are familiar with it. And again, I'm not teaching you anything new. Maybe I am, or at least maybe I'm shedding some light or popping some light bulbs off, and you're going to see why here in a moment. So let's talk about the setup, and we're going to look at several charts. So the setup is price action based. The pattern is comprised of a low, a higher high, and a higher low, and a break of that higher high in the case that we're going long, inverse of short. It anticipates a change in the trend from up to down on a break below the 2 or the B point, anticipates a change in trend from down to up on a break above the 2 or the B point. All right, so the strategy. It usually occurs at the end of trends and swings. It can be an indication of a change in trend, can also be found within a trading range. And I will stress that it works extremely well when the pattern sets up at important or significant areas of support and resistance, head and shoulders, tops and bottoms, double tops and bottoms, and other high probability technical patterns like that. So let's look at the basic mechanics. Don't worry or get caught up with market this is or what time frame is. It doesn't matter. We're just going through the basic concepts, and we're going to look at several real examples. So here on the chart, we're looking at a 1, 2, 3 top example. This is a number 1 right here. It's the highest peak when it finds resistance. Market pulls down, retraces back up. We have an established number 2. 1, 2. Market trades higher, stops right here, and then pulls back. That gives us our established number 3. 1, 2, 3. So as long as we don't take out the number 1, we have a valid or solid 1, 2, 3 setup. Entry, we're looking to get short on breaks or closes below the number 2 point. Let's look at the 1, 2, 3 bottom. As you would suspect, it's going to be the exact same rules, but only in inverse. So you can see the market comes down. We have a low here, giving us the number 1 point. Market trades higher, pulls back, giving us a 2, 1, 2. Market trades lower, lower, lower. Finally, retraces back, giving us a 3. So as long as the market could have come all the way down here, as long as it doesn't take out the number 1, and we have a 1, 2, 3 setup. And then it trades sideways. But for the 1, 2, 3 bottom setup, we would be looking to get long on breaks or closes above the number 2 pattern. So let's look at some chart examples. This is the fun stuff. So this is a daily chart of the Aussie dollar, the Australian dollar, 6A in the futures, FXA if you're trading ETFs, or the Aussie US dollar in the Forex markets. You're going to see the exact same pattern regardless. Now, FXA may not be as liquid as the 6A or Aussie US and Forex, but again, you're going to see the same pattern. I'm going to stress that a couple more times throughout the presentation. So here we are on a daily chart. On a daily chart, we primarily like to look for 52-week highs or 52-week lows. That's where our higher probability setups are going to occur, and that's where I would encourage you to start looking first, depending on your experience. Now, I have dialed my settings back a little bit where I like to look maybe every 6 months. Generally, the higher time frames, such as the daily, are going to give you the highest probability, but it works in all time frames. So here we're looking for a 52-week high, which is what we get, is indicated by the number 1 circle. Market pulls down, retraces up, giving us a number 2 support here. And we have a shallow retracement, only 3 or 4 bars, and then comes back down. We have a 1, 2, 3. This 3 could have been much higher. It could have been up here, could have been here, but it landed right here. So now we know that we're looking to get short on breaks and closes below the number 2 point. That's exactly what we did. So you say, that's great, Silas. Now I understand the 1, 2, 3 top pattern, but where do I get in? Where's my stop? Where's my target? And all that. So our initial risk is always placed above the number one. Our target is simply the distance between the high of the number one and the low of the number two measured down below the number two. So it's a 1-to-1 risk reward ratio as you start the trade off. But more times than not, you're going to have plenty of opportunities to move the stop lower, in this case, trailing the stop above next areas of resistance. But you must allow the market time to breathe and allow it to move per this pattern, this high probability pattern. So in this case, from here to here was 225 ticks, or a little over $2,200 per contract, and it met its profit objective. Let's look at the 1, 2, 3 top pattern on Walmart, daily chart of Walmart. This is a number one point, which is a 52-week high. Market comes down, pulls up, giving us a 1, 2, 3. Several days go by, but we already know what? We already know what most of us traders struggle with. We know where our entry is, we know where our stop is, and we know where our profit targets are, right? So stops up here, target is the distance between 1 and 2, which is approximately $5, and you can see it met its profit objective and continued to trade lower. So let's look at a couple of 1, 2, 3 bottom examples. This is a 15-minute chart of the E-mini S&P. So when you're looking at an intraday chart, we have to slightly change the rules. We're not looking for 52-week highs or 52-week lows. We can't do that on an intraday chart. So now we're looking for session lows. So what I do on, say, futures or Forex is I go back to the Globex session. So if you're not familiar with futures or Forex, they trade virtually around the clock, and Globex on the futures market, and then Forex is on the foreign exchange market, and which unregulated Forex exchange, and they trade around the clock. So in the Globex, they open at Sunday at 5 p.m. Central, and they trade all throughout the rest of the night into the next morning and all through the rest of the day, close at 4 p.m. Central for about an hour or so, reopen at 5, and then we start over. So it's almost like a 23/6 market. So if I start my trading day at 6 a.m., maybe I start at 2 a.m., it doesn't really matter. I'm looking left, and the rest of the day going forward, I'm looking for new highs or new lows of the session. So this is what we get. We get a low of the session as indicated by the one circle. We get a 1, 2, 3, and we're looking to get long on breaks above the number 2. So aggressive traders could work a buy stop order, a tick or two above the number 2, and you get triggered long. A more conservative entry method might consist of either A, waiting for the market to come back up and retest the breakout level, or 2, wait for the hook back up and through. So aggressive traders are going to get long here. The hook method is to wait for the market to break above and then hook back for confirmation. So that method is going to keep you out of potential false breakouts, but it's also going to keep you out of other potential winning trades, right? So sometimes we break above, we zip higher, meet target, and continue to run and don't look back, and so we miss the opportunity. That's okay. There's plenty of other markets, so don't get worried about that. So you can see this one met its 20-point profit objective. Let's look at a 1, 2, 3 bottom on Apple. Weekly chart, hell of a way to catch some serious longer-term moves trading off of a weekly chart. We have a 1, 2, 3 bottom on multi-week lows. We also have a double bottom, another high probability technical pattern. We get a bullish candle break above the number 2 here. We trade sideways for a few weeks, come back and retest, and that's where we get long. We get long Apple, we buy stock, we can buy calls, we can buy call options, we can sell out the money, put credit spreads, whatever your style of trading is, okay? So now I must break your hearts and show you what a failed trade looks like. It doesn't work 100% of the time. Sorry to inform you, nothing in trading or in life does. It's just part of the business. But I know that we all know that. So here's what a failed trade looks like. So we have a 5-minute chart of the E-mini S&P, strong market, vertical trend. We have a nice setup. I like this trade. We have a trend line break, probably have some type of divergence or something going on. We have a 1, 2, 3. You're either getting short here on the immediate break, or if you wait for the hook method, you're getting short here, and you're up about 1 or 2 points, and then the market reverses. So if you're exercising any type of money management, you're stopped out here above the next area of resistance, or if you didn't do anything, you just sat on your hands, you're stopped out here above the number 1. And what happens next is we start a new count. We get a new count up here. This is a new number 1. Why? Because it surpasses this number one high. So we have a 1, 2, 3, breaks below the number 2. We get a couple of retests, and the market trades to the downside. And this is what a no trigger trade looks like. It's neither good, bad, nor ugly. It's just for example purposes of what happens when they don't trigger. So here we have a 1, 2, 3. We're looking to get long above the number 2 point. What happens? The market breaks down, takes out the number 1 low here. We start the count over. 1, 2, 3. Market breaks down, takes out the number 1 low. We start the count over. We start the count one last time. 1, 2, 3. We get a break above the number 2. And what I want to stop and talk about this, for example, because when this happens, it's really, I like this. I like it when it happens, and feel free to type in if you could tell me why. Maybe you just know you're brilliant, or maybe you've seen this presentation before. But tell me why would I like that? Because one, we're getting a better value buying opportunity, and same would be the flip side if we were trading to the long side. So we're getting a better value buying opportunity. The market's working its way lower. And secondly, we're probably having some type of divergence going on. So what that means is we're having lower prices, new lows, new lows, new lows, but we're probably making higher lows on, say, RSI, MACD, stochastics, whatever your favorite divergence indicator is. And when we get that, we have a really potential explosive move, or yes, exhaustion, exactly. So 1, 2, 3 pattern trade management. So again, confirmation of entries on a break above the number 2 or the B point for a long trade. It's on a break or close below the number 2 for a short. Exit strategies, if you're trading a 1 lot, maybe you're trading 1 lot futures, 1 lot Forex, 1 option contract, hell, could be even 1 stock share. Always go for the distance between the number 1 and number 2 point as your initial target. You can go look at example after example, and it's uncanny how often that they'll tag target number 1, which is that exact distance, and often reverse. Now, if you're trading multiple contracts, multiple shares, I like to use good old-fashioned support and resistance levels, Fibonacci numbers, moving averages, but really that comes into play. Your personal style, your personal method of trading, they come a dime a dozen. There's Donchian channels and Parsar, Fibonacci, 2-3 bar candle stop. Really, that just comes into play whatever your style of trading is. Okay. So I've shared with you that the setup works on any market, whether you trade pips, Pepsi, pot, either pot stocks or potash, pork bellies, or the Polish zloty. Also, any time frame, whether you're trading a tick, 5-minute, hourly, 240, daily, and so on, and any trading style, whether you're a position trader, a scalp trader, a swing trader, or a tick trader. So do me a favor and type in the chat, what is your style of trading? What is everybody's style of trading? I'm gonna take a swig of water here. And I got a scalper right off the bat. Lots of swing traders, a lot of swing and day traders. Scalping is tough. Tick trading, I thought used to be hard, but I'm going to show you something that we're doing with this strategy on a tick chart. That's pretty cool. So mostly day and swing, and then a couple of scalpers. And the point of that is just you have to determine what your bread and butter is. So for me, my schedule, my personality, things like that, I like to trade the 5-minute. I like trading the S&P, NASDAQ, crude oil, some of the currency futures, and occasionally the 30-year bond. Also enjoy swing trading the hourly and the 240, which is the 4-hour on currencies and some of the commodities, and then swing trading anything. Really, swing trading is the ultimate bread and butter. That has been my best success in trading, and that's where I got started on my trading journey. I had no time to sit and watch the markets all day, certainly not scalp. Didn't even have real-time quotes at that time, or they were, probably something like $1,000 a month. I don't know, but it was too busy, and really that fits most people's lifestyles. It all just depends on where you are in life and what you are comfortable with. So that's all about finding your bread and butter. So you've seen the proof already. Let's look at some more real trade examples. And these are real trade examples. The others were not unreal. They were real, but these are trade examples that we've taken in our membership services. So here is crude oil. Everybody's familiar with crude. Whether you trade crude futures, crude CFDs, maybe you trade USO or another leveraged ETF, or perhaps energy stocks or something like that. And we're looking at 3 examples. I'm just going to talk right here off the cuff, looking at the chart instead of reading all these details on the right. So over here, I'm going to start on the left. We have a number 1, Y. This is a 52-week high. We have a 1, 2, 3. It's a smaller 1, 2, 3. I will give you that. It is a smaller 1, 2, 3, but it is a valid 1, 2, 3 nonetheless. So we have a 1, 2, 3. Market breaks down, closes below the number 2. We get a couple of retests. It meets our $3 profit objective, or $3,000 per contract. Now we go sideways. So the market trades sideways, and a lot of people would say, well, you missed a 1, 2, 3, a nice 1, 2, 3. And maybe I did, maybe I didn't, but I'm not really interested in trading the range bound 1, 2, 3s. If that's what you want to do, by all means, go for it. These are some really good setups, even inside a trading range. So we have a 1, 2, 3, but on a daily chart, I'm looking for the next 52-week high up here, or the next 52-week low down here. And that's exactly what we get. We have a new number 1 point. Why? Because it's a new 52-week high. It's higher than this high. So we start to count 1, 2, 3. Again, a very small 1, 2, 3, but it's a great pattern. And I'll tell you a story behind this trade and why I got so excited about it. One, we already know that we're looking at a very high probability 1, 2, 3 pattern, which is what we've been talking about the last 30 minutes. And then secondly, we are approaching a time frame in the calendar year where the market is typically bearish. So the market tends to drift to the downside starting at around this time of the year. So now, not only do we have the high probability technical pattern, we also have a high probability seasonal pattern. So when we see that, that's what I call the perfect marriage in trading. So we have a 1, 2, 3, and we have a short. We have a breakdown below. We get 3, 4, 5 days of retest, giving us ample opportunities to get short, and that's exactly what we did. We shorted crude oil. We shorted crude futures. We sold out of the money call spreads. We bought puts. We bought put spreads. We had people trading leveraged ETFs, and the list goes on. Again, whatever it is that you trade, you could have taken advantage of this. And this market, not only did it meet its $4 or $4,000 contract move in less than a week, it ended up moving down over $20,000 per contract. Now, we did not catch the entire move, but we caught a large chunk of it. And so now we are just patiently waiting. We're trying to be patient, watching the market sell off, and we wait for a reversal pattern. So here we finally start to get maybe a 1, 2, 3 here. That's voided, and then we get another potential 1, 2, 3 here. 1, 2, 3. We would be looking to get long above the number 2. And let me tell you a story about this one. I really am getting really excited about this trade. Why? 1, 2, 3. I love 1, 2, 3s if you don't know by now. Secondly, we have probably my second favorite technical pattern, which is a triangle, very beautiful triangle. To me, that's crystal clear. 3, we are now approaching a time of the year from a seasonal perspective where the market tends to go higher. And this is one of the most bullish seasonal patterns that I'm aware of, getting long crude oil at this time period. Well, what happens? Instead of getting long because I think that XYZ is going to happen, I let the market tell me what's going to happen. The market breaks down below, voids the 1, 2, 3 pattern because it takes out this low, and we start to count over. 1, 2, 3. We start to count over, and now we get a better long. This market ended up trading another $10,000 lower from these levels, okay? So I want you to remember this chart that we're talking about as well as the others, because we're gonna go back to them and look at something pretty cool. Gold. Everybody trades gold, everybody watches gold. Everybody likes to try and make predictions about where gold is going or what it's doing. I like to say, who cares? It doesn't matter. Quit trying to make predictions and look at the chart and let the chart tell you what to do next. So this is GLD. This is actually the ETF GLD that tracks gold. I like to look at the futures contract first because it's more fluid. You're not going to see all the gaps because it's trading around the clock. But again, you're going to see the very same pattern. So starting from the left, we have a 1, 2, 3 top. breaks down below the number 2, get a couple of retests, and it moves $4 plus per contract. Now we flip to the long side. We do not try and get married to any particular direction. We're only focusing on the high probability setups. So here we have a 1, 2, 3. We get a break above the number 2, reaches its $2 profit objective. So here we go again, very similar to the CRUDE example. We're trading range bound. Well, did I miss this trade or did I miss this short? Maybe so. You know what? I'm watching dozens or hundreds of other markets. I'm not concerned. I'm only looking for new highs or new lows. So here we go again. Market breaks down, starts taking out the number 1 lows, and then we finally get a new number 1. 1, 2, 3, looking to get long above this number 2. But what happens? Market breaks down. If you can see it, it gaps down, takes out the number 1 low here. We start to count over. 1, 2, 3. Market gaps higher 2 days in a row. Boom, boom, comes back and retest. You also get a trend line retest here. That gives us validation to go ahead and get long gold, and that's what we did. We bought call options, we got call spreads, sold out money put spreads, and bought gold futures. I see some questions coming in. I appreciate that. Hang tight if you don't mind. We're going to get through the examples here, and then I'll go back and answer all of your questions. Daily chart of Delta Airlines. Don't mean to beat a dead horse, but here we are again, 4 trade opportunities. 1, 2, 3. Bottom, 1, 2, 3 top. Now this one gaps down below the number 2 breakout. It never really looks back. I like to come back and see a retest or the hook back down. So I would not have been in that trade. And then we have a new 1, 2, 3 top right here. We get a small retest, moves down $8 plus. And then we get one last long trade over here, 1, 2, 3. And the market zips to the upside. For you Forex traders, this is a chart of the CAD Swissy, a 4-hour chart of the CAD Swiss franc on a 4-hour chart. So here, this first example, we have a 1, 2, 3 bottom on a multi-session low. We also have a double bottom. We get a break above the number 2 here. So those aggressive traders would have gotten long immediately on the break of the number 2, or the conservative trader would wait for the retest and or the hook back up and through, and we trade and meet our 70 pip profit objective. So now we start hunting for a new 1, 2, 3 top. 1, 2, breaks above the number 1, voids the trade. 1, 2, voids the trade. 1, 2, 3, looking to get short. What happens? Breaks out above the number 1, so we start to count over. 1, 2, 3, meets the 40 pip profit objective. All you day traders, day traders. 5-minute NASDAQ chart right here, E-mini NASDAQ. And look, let me tell you, with the invention or introduction of the micros, the E-micros, micro NAS, micro Dow, micro Russell, micro S&P, gives us a lot of great opportunities. Now you don't need to be gun shy about trading the E-minis, which can be quite volatile and entail quite a bit of risk. But now with the micros trading at $1 a pip or a tick or 50 cents a tick, really should give you ample opportunity to trade. So here we have 3 examples. 1, 2, 3, get a break above the number 2, hook back up and get long, meets its 13-point profit objective. Here we have a 1, 2, 3, get breaks down below the number 2, trade sideways, have a little bit of heartburn here, finally trades lower and meets our 20-point profit objective. And then here we have a 1, 2, 3, break above the number 2. If you're lucky enough and get filled right there on the retest of the breakout level, you reach your 30-point profit objective in about 2 bars. All right, so why are you here? Why are you here? You're here to learn my mechanical done-for-you strategy for all markets and all time frames. So have you seen enough proof? I'm going to take another swig of water if you don't mind, and please type in the chat, have I at least fulfilled my promise? Have you learned a simple and mechanical strategy that you could begin applying immediately? And don't you be looking at charts now during the break. I'm just kidding. All right, great. Thank you. And if I wasn't, I would be highly concerned, because that would defeat the whole purpose of the presentation. So I love this stuff, and I think I've taught you a mechanical done-for-you strategy for all markets and all time frames. But wait, famous last words, but wait. What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if we could have the ability to have the trigger and target and entry drawn for you? And what if your platform could scan the markets for you and tell you when there's a pending setup? I'm raising my hand. I'm saying that would be awesome. Okay, so you are in for a treat. So do you remember the examples earlier? I hope you do. It's just a couple of minutes ago, a few slides ago. Remember the examples earlier. Remember the crude oil example. This is the exact same chart that we just looked at on crude oil, now with a special 1, 2, 3 indicator plotted onto the chart. So you probably already figured it out. You're smart people, but let's talk about what all these colors mean. So here we have a green arrow, that's the number 1 point. Your red arrow is your number 2 point. Your blue arrow is your number 3 point. 1, 2, 3. Pretty simple. Now, you say, what are all these white arrows, these white chevron or white stealth signals? These arrows are not sell signals and these are not buy signals. They're simply a visual aid alerting us or telling us that, hey, we have broken or penetrated the number 2 point, so we may want to be on alert for a potential trade. So you can see right here, this candle is the candle that took out the number 2 low. Down here, this candle is the candle that took out the number 2 high. You see the price action made a higher high than this number 2. So if and only if that happens, you're going to get that white chevron signal on your chart. And if and only if that happens, you're going to get these 4 beautiful lines plotted onto your chart. Well, what are these 4 lines? Well, the blue line is the breakout level, could be considered an entry level. It's all designed for visual purposes, okay? So we have the blue line here saying this is the area that broke. The red line is your initial risk. Remember, above the number 1 for a long and below the number 1 for, above the number 1 for a short, below the number 1 for a long. Your green line is TP1, which I call take profit 1 or take profits number 1. And then your dark green line is TP2 or profit objective number 2. And that's just 2 times the distance between TP1. Okay, so remember when I was telling you, remember this chart. So this was that first example. This was the second example. This is the third example. What about this in the middle? Why are we seeing all these green arrows? Well, these green arrows are saying that we're making new lows, new lows, new lows, new lows. Once we stop making new lows, we get a number 2. 1, 2, market pulls back, we get a 3. 1, 2, 3, voids the trade, so we start to count. It never broke above the number 2, so we do not get the white chevron and we do not get the 4 target lines or the 2 target lines, the breakout level and stop level. Here's that second example. I was like McDonald's and loving it. 1, 2, 3, looking to get long. But what happens? Market broke down, takes out the number 1 low. This is a lower low than this low. So that's why we have a new green arrow. So new lows, new lows, lows, and we start to count over and you can see what happened. Here's the gold example. Here's the gold example. And yes, these do not repaint. These do not repaint. There's no calculations to be done. We actually have had these updated where it gives you price labels up here in the top left-hand corner. So here we have the 1, 2, 3 bottom. Here's that range bound mess. Here we're starting to count over. Excuse me. 1, 2, 3, 1, 2, 3. That's the one we're looking to get long. We made a new low. 1, 2, 3. We break out, come back and retest, and the market trades higher. You can see we're starting to put in a new 1, 2, 3 top over here. All right, DAL, Delta Airlines. Here's the long, here's the short, here's the short, here's the long. Remember the 5-minute NASDAQ futures. Here's 4 trade examples. We have the 1, 2, 3 top, break down below, hits TP1, hits TP2, which actually happened to be a new session low as well. 1, 2, 3, get a break above the number 2, just peeks its head out to get us long, and then it hooks back up, hits TP1, almost hits TP2. We trade range bounds. People ask all the time, does it work in range bound markets? Does it work in sideways markets? Well, yes, because it's only looking for set highs or lows, so you're not going to get any signals. So I would say it does. Here we have a 1, 2, 3. Market breaks above the number 2, hits TP1. You can see that we're starting to make new, or we are making new highs, but we're starting to put in new 1, 2, 3 tops. We actually hit number TP2, and we finally get a new session high of the day. 1, 2, 3. Market breaks down, gives you a retest and a hook, TP1 and TP2. So, is this training for you? Only you and you only can answer that. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise, the indicator overload, and the paralysis analysis that we talked about, or if you want a specific step-by-step mechanical plan, you can do this. You can even do this part-time. So I love telling this short story, and then we'll move on, is about, before I release this, is I brought my wife down, who's a ballet teacher, brought my 2 daughters down who were like 5 and 6, or I don't know, 4 and 5, I don't know at the time. They don't know a flying thing about the market, trust me. And I showed them the exact examples that we just looked at and said, look, so after they got past the excitement of all the colors and looking like Skittles and things like that and the rainbow, I said, all right, let me tell you what we're trying to do, or what this is trying to accomplish. And finally, after a little bit of education, because one's a ballet teacher and the rest are 2 little girls, they finally understood it. So I just have to say that, tell you that story, because if they can get it, the general premise, then you certainly can too. So I am proud to offer a very special offer for today's workshop attendees. We do limit this to 25 spots because I do monitor and man my own support inbox, but it's the 3S code high-low indicator and scanner. So what you just saw was the 3S code high-low indicator. And we've had this program for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. We're also going to include the chart pattern principle PDF manual and trading guide, a chart pattern cheat sheet, 25 top option strategy guide, VIP email support. I love to take care of my students and clients, and also going to include weekly high-low scan updates across stocks, futures, and Forex. So you're going to get scan updates each week across all these markets based on the 3S code. Now, if you forgot about what the 3S code is, or what the heck it is, this is a refresher. Here's a daily chart of CRUDE, 1, 2, 3, hits TP1, TP2. Here's a 1, 2, 3 top in CRUDE. Again, here's a 1, 2, 3 bottom in CRUDE. Here's what it looks like on Bank of America, BAC. Nice, easy, clean, and simple swing trades here. There's a long, there's a long, there's another long. Here's a chart on LUV, Love, Southwest Airlines. Here's a 1, 2, 3 top, hits TP1 to the tick. We get a 1, 2, 3 top. It's a losing trade. You can see we got stopped out here. We get a chance to get short again, 1, 2, 3, and then the market's TP1 and then TP2. Remember when I said, why do all the work when we can let technology do the heavy lifting for us? This is a snapshot of my account in Thinkorswim. You can see I'm scanning for 1, 2, 3 tops in the Russell 1000, only stocks that have options on them, $20 a share or greater. I hit the green scan button, voila, I get my results. And this is some snapshots of some watch lists I had. I have a monitor dedicated to watch lists where I'm looking at multiple scans across Forex, futures, and equities, 1, 2, 3 tops, 1, 2, 3 bottoms on a daily, 4-hour, weekly basis all the time. So we've been looking at TOS. This is what it looks like on TradeStation. You can see the charts here, the 3S code, and then here's your scanner component. Here's what it looks like on NinjaTrader 8. Here's your chart. There's your scanning component. Here's what it looks like on TradingView, 4-hour chart of Apple. There's a long, there's another long, and then here's what it looks like on MT4, 4-hour chart of the Euro Kiwi, long, short, short, and long. And let me tell you that first, that the scanning component is only available on Thinkorswim, TradeStation, and NT8, not available on TradingView or MT4. Unfortunately, we've looked. I don't think it's possible, but if you know otherwise, please email me and we'll get that sucker program. So we know that there's no real crystal ball in the market, but I do like to view this as my crystal ball that provides a process for my day. So I let the technology scan the markets for me, locate the setup, go into my platform and enter the market, and then I manage the trade through its exit. And you can too, starting today with the 3S code. The 3S code, again, it's the high-low indicator scanner for the 5 platforms: chart pattern principle PDF manual and trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and weekly high-low scan setups across stocks, futures, and Forex. We've recently offered this on the internet at these prices, no joke, $19.97, $14.97, and $9.97. But today, for the first 25 people, we're going to offer this for a one-time fee of $397. It's a one-time fee. You own the indicator and scanners for life, as well as all the educational components. The offer is www.seasonalswingtrader.com/code. And let me put that into the chat box for you. And there it is right there. So the offer link is seasonalswingtrader.com/code, www.seasonalswingtrader.com/code. So let's talk about what the indicator scanner includes again. Visual plot of the 1, 2, 3 top and bottom reversal areas that we just talked about. That includes the entry, exit, stop, and target levels, customizable settings, multiple look back periods. You have the ability to scan for setups and trigger only or both. Scan for tops, bottoms, or both at the same time. You can scan for intraday setups as well as swing setups at the same time across multiple time frames, as well as multiple instruments. So a lot of people like to go in here and tinker around with the settings. They change the look back periods. They change the frequency of the bars or the percentage that will actually trigger, that will cause the trigger of the 1, 2, 3. They'll change the colors. If you don't like red, you want hot magenta, you want puke green rather than lime green. You can change all of that. You can change, if you don't like the arrows and you want dots or hashes, whatever your platform allows. A lot of it is customizable. So a lot of people just use it out of the box, and that's what I would recommend, but I certainly understand if you want to go in and tinker with the settings, and I've got some people that do that and send me some feedback, and that's always highly encouraged. So let's talk about this bonus. So you're going to get a 90+ page PDF manual, chart rating, identifying trending and range-bound markets, additional strategies, option strategies, other high probability chart patterns, and season analysis. Bonus 2, 25 top option strategy guide, literally strategies for all account sizes and types, everything from your basic calls and puts to more intermediate advanced, such as calendars, condors, verticals, butterflies, and more. Bonus 3, access to the weekly high-low scan updates. Scanning the markets, again, all day, every day. We're going to input that into a shared document to the members area. You're going to get those on stocks, ETFs, indices, futures, and currencies, all of the high-low 3S code setups. These are unsolicited testimonials that have come in. I don't ask for these, but I'm very humbled by them, of people using the 3S code. So I'm just frankly glad that they're actually taking action and putting it to use. And this guy sent me a screenshot of his account where he's up almost $8,000 in Campbell, only trading simple calls and puts using the 3S code. Here are some more examples of what we've done with the 3S code. 7,800 on crude, 58 on unlead, 1,800 on pound, 1,400 on the euro, 3,600 in nat gas. It was like a 2-day trade, all by using the simple pattern. I eat what I cook. Eat what I cook. These are real screenshots of my real platforms here in Thinkorswim, where I do equity and equity options. I do have some futures options in the 10-year note and nat gas. And then my futures platform, where I've got crude options, cotton options, copper options, yen options, nat gas options, and the S&P. And here is just a nice, clean example of a 2-point trade in the E-mini S&P. And the offer again is seasonalswingtrader.com/code. I'm going to show you exactly what I did today. Here, I don't know if you can see my dome. This is not a demo account. I was trading a 4-hour chart on the British pound right there. Here I'm in a trade on the Australian dollar. I'm short 68.75 call options. This was just a futures trade. I was just short of the futures outright. Here is I'm long yen options, down 200 bucks on Japanese yen options. And then here was a closed trade in RBOB unleaded gas. Bought the December 160 calls, and I closed that out for $600. That's in one of my accounts, and it's trading one lot. So I'm not lying when I use this every day. It is my bread and butter. So I've got some questions to answer. Let's put the complete offer up once again. It's seasonalswingtrader.com/code, and we're going to take a look at some charts here in a minute. Let me scroll up and look at all the questions. All right. John, so this individual is a user of the 123. He's got a question about the radar screen. If you can, John, shoot me an email at support@seasonalswingtrader.com, support@seasonalswingtrader.com, and send a screenshot in all of your settings so we can take a deeper look into what's going on. But I have no problems of using the TradeStation radar screen. Bruce asked, do you own the indicator scanner for life? Yeah, I mean, you own it for life. I'm not going to be around forever, but as long as you can download them, you have access to them. Newt asked if there's any other strategies to accompany the system. So there are additional patterns and setups in the PDF, in the bonus PDF manuals. All, what I perceive are all historically reliable setups, mostly price action based. So yes, there are additional strategies, but really the point is, we're talking about this one simple mechanical setup, but certainly use them in conjunction with other things that you may be using. Michael says, do I use stops? Of course I use stops. Patrice, can you run multiple scans or watch lists at the same time? Yes, I do. I mean, I'm running weeklies, 4-hour, hourly, across multiple markets. No, you do not have to trade options. You can trade anything that you use to trade anything you want. I like to do the swing trading. I like to use options most of the times, and kind of as we talked about at various points of the presentation, I like to use them to trade credit spreads, and depending on the setup and depending on kind of the risk reward scenario, that will determine whether I'm a buyer of a call or put outright or the futures. But I really like selling out of the money call spreads. Yes, you can load this on multiple platforms. You don't have to just choose one. You get access to all of them in the members area. And then so in the members area, there are tutorials and guides on how to set up on all of the platforms. If you can turn on a computer and you were able to log into this webinar, you can do it in probably a couple of minutes, but we do have some support that can help you. Does it work on Tick and Rinko? Yes. No, I do not have a trade room. Do I wait for the retest of the area before entering? I think it's one of the most prudent methods, or to me, it's a prudent method, is to wait for the retest or the hook back. So sometimes the market, you're going to miss trades if you're not working, say, just a pure buy stop. You're going to miss some trades that just shoot to the moon, or not to the moon, but maybe TP1 or perhaps TP2, don't look back, and you kick yourself, man, I missed that. That's okay. There's plenty of other markets. I like to wait for the retest for possible entry, or sometimes I'll wait for the hook. But there are a couple of other things that I do. I don't try to put too many overlays or extra confirmations, because then that defeats the purpose of the simplicity and kind of going back to the paralysis analysis thing. But let me look at, actually, let's just pull up a chart here, and we will, so like, I like moving average confirmations, like on the intraday charts, whether it's a 5-minute or a tick. I like to see the crossing of the 5 and 21s. Also, I like to see divergence, and I'm also cognizant of, you know, kind of where the major moving averages is. And this purple one is just a 200-day. I think it's a 200 or maybe a 244. So like, if this was the breakout level, and we had an example, there was an example of this the other day. Let's say that this was a 1, 2, and then maybe this was 3. Buying right into the 200-day moving average would probably not be wise. Now, once you get over that, then it becomes a higher probability trade, because we've broken, you know, through that resistance. Or here's another example: 1, 2, 3. That trade never came to fruition, because we ended up making newer highs, so it avoided the trade. But if it held, what would we have been doing? We would have been selling right into 200-day support, which also you can see that we had, you know, it's a little bit of price support. So we've been kind of selling into support, and also the 200-day moving average. So that's kind of just a common sense perspective. Does manual include other patterns? Yes, it includes really what I think is the key ones that you need to be aware of. You know, the pennants, the triangles, the wedges, the head and shoulders, double tops, double bottoms. Those, you know, it's nothing new, not reinventing the wheel. Don't need to. A lot of it's price action based, and there's, you know, really those 4 or 5 patterns that repeat themselves over and over again. Let's see. So I got another question about recommending filters. Yeah, I mean, you know, I think I kind of covered that about filters. You need to kind of do your own homework there. But we have a guide in the members area, and in fact, why don't I just try to make it simple, and I'll show you. You log into the members area. All right, Eddie and Rich and Jack, thank you. They said that they are in, so I appreciate that. Give me a minute here, and we're going to see if I can get logged in. And this is, while I'm logging in, this is today's 233 tick chart on the NASDAQ. And so one of the things we talk about, I think where I was going, is we have some guides on kind of best uses or best practices, tips and tricks. So like, for instance here, you know, I like to wait for a close, at least a close above the number 2 breakout, which we don't get here. We don't get here. And we don't have the 5 and 21 are crossed. So let me pull this up here. So here's what the members area looks like. Here's where you're going to find your weekly high-low scan updates. And I do that once a week. So here's all the resources. You can see all kinds of other unannounced bonuses, but we've got how to trade the signals, understanding the study, customizing, setting up scans, day trading with the 3S code, swing trading. Here's all the bonuses. Here's the ETF trading symbol guide. If you want to, you know, you say you don't trade the euro currency, you're looking for an ETF or leveraged ETF to trade. There's all that kind of stuff in there. Here are all of the installation videos and guides. There's for toss. Here's your indicators and your scanners. TradeStation V95 and V10, NT8. Trading View, remember, no scanner available for TV. and then MT4. No scanner for for MT4 either. And then monthly member bonus sessions. So that's what that looks like. All right, so let's get to business here, and I wanted to take a look. I'll show you the pattern that I traded on the pound. They gave me this right here, this $359, and it was this. This is the pattern right here on a 4-hour chart. I did not, didn't hold it all the way down to the target of whatever that is, 127.89. Here was the Aussie dollar. So we've had good back-to-back 4-hour trades there on the Aussie dollar, and I think crude oil is in a 4-hour. So we met profit objective on crude oil from 53.50 up to 55.60. So this is another thing I wanted to show you that I keep track of, trading off of the 5-minute bar on crude. So this is crude, or this is S&P, and this is crude oil, and this is just a 1 contract basis for the month of October so far. So this is 2 contracts. That's 2 contracts. And if you did add them up both, it's about $6,600. And this was September right here. Actually, we'll go back up. I've got a month. There we go. So here is, you can see the average, just trade on 5-minute chart there on a 1 lot. And then here's if you're trading 2 lots combined, 3 lots combined. And so it's something that I am watching and tracking all day. Oh, and that brings my attention. Also, the 4-hour on the currencies. So this is traded for. You see we've got open positions there in the pound and the yen and the kiwi. And this is just trading 1 contract off of a kind of a swing basis. Yeah, so let's look at, so I've got Tilray, which is a pot stock. I don't really trade pot stocks, but when we look at it, this is a daily chart of Tilray. So what you're seeing here is what you're going to see on yours when you load it. Here's where you're going to go in. Again, depending on your platform, you can come in and manipulate the settings. I would encourage you to change the custom look back period to yes. You can see my look back's 126, and you can turn all this off and on. Here's where you can change all of your settings and stuff like that. So that's Tilray. Let's see, Bank of America. So we had that long trade, and we had a short trade up here. So BA, if we get a new lower low from this low down here, we'll have a new 1, 2, 3 count to start. J&J. So we have a new 1, 2, 3 count. Notice that, so we had a 1, 2, 3 bottom here. We just had our 1, 2, 3 top meet its objective. And then here, look at that. I mean, it triggered, and I probably would not have been in it due to earnings, but the earnings report sent it right up to TP1. I mean, to the tick, and then reverse. That's why I say don't get greedy. Target TP1 because it hits that a lot. Yeah, I'll look at Twitter. I think Twitter had earnings today. Man, they got smoked, didn't they? This is a trade we actually took not too long ago. We sold call spreads on Twitter, and look at TP1, and then reversed, or not reversed, just went sideways. but it acted like support, and then it got hammered today. So we'll be watching for potential trade there. Goldman Sachs, nothing cooking in Goldman. Procter & Gamble, we do have a new 1, 2, 3 top in play. Here's a couple of examples of, like, you know, why I don't like to work just, you know, selling a tick below. I want to see that confirmation close. Didn't get that here. Didn't get that here. Moving averages are strong. Finally start to roll over, and then we break. The dollar index, I'll look at UUP. So we just had a 1, 2, 3 top on UUP. Here we never got confirmation. Must have broken by like a tick there. New Zealand dollar, the Forex pair, yeah, okay. So here we are in a long trade right now on a daily chart. So we got a break and close above, got a retest, moving average up. These were the lowest lows, but we have a divergence. It's not a perfect drawing, but I think you get the point. Lower lows, lower lows. It's just kind of like that example I showed earlier on the S&P. Lower lows, higher lows. That's what I like to see right there. This was a good setup. And when you reach 50, 60, 75% of your profit objective, don't get greedy, or don't be lazy. Take some profits, adjust your stops, adjust your risk. If you get stopped out at break even, it's not the end of the world. You'll have there's plenty of other markets to look at. How do I scan for multiple time frames simultaneously? You just load the scans up in your platform, and then you save that scan. So let's say that you know, I'm going to scan for 1, 2, 3 tops in the weekly, and let's call it the, you know, Russell. I would, you know, put in my criteria, only shares greater than X, maybe open interest greater than X, or volume option greater than X. You know, create all your custom variables. If your scanner can do all that, or your platform can do all that, save it, and then you open that up as a separate window. So like, let me do something here. So like, this is a 1, 2, 3 top stocks that I have going. And then what I can do is say, all right, show me, I don't know, 4-hour FX top. And so I get that, but what I do, instead of flipping through all of these, I've got like eight or nine of these windows on one complete screen. So I've got one showing me top, one showing me bottom for Forex, showing me top, bottom for futures. But I still look to these manually at each day. The stocks is where it becomes really helpful because there's so many stocks, but just out of habit and because I'm passionate about it, I look through all the commodities and all the futures every day anyway, and you know, about 30, 35 markets on each of those. And then I have watch lists for the stocks. If I use 4-hour chart, how long do the trades usually last? Oh man, that's a good question. They can be completed in the same bar, which is the same 4-hour bar, so 4 hours. But if it triggers, it could be like, you know, 5 minutes, 30 minutes. Usually not the case. I've had 4-hour trades that lasted, you know, anywhere from, like I said, the same bar, or maybe, you know, 4, 8 hours, something like that, to several days and even weeks. I mean, some of them can last weeks if they trade really range bound. And sometimes you'll get reversals inside of that pattern. You know, you might be long something, but then you get a new short setup before it reaches its profit objective. but it's really hard to say. They usually don't last weeks, but they can last. It's not uncommon for them to last several days. They're, that it's pretty clean trading because you don't have to be married to the screen and all that. All right, folks, I think I've answered everything. If I missed anything, email me, support@seasonalswingtrader.com. I appreciate PT and Raj also tell me that they're in. I will be looking for your emails. If I missed anything, support@seasonalswingtrader.com. Here to help you, and enjoy this stuff. I love it, and hope to see everybody in the inside, and you can get your hands on this great indicator and scanner, and look forward to trading it with you. So hope everybody else enjoyed it, and maybe you learned something new, and look forward to seeing you on the next update. Take care. Have a great rest of your day, and we'll see you on the flip side. Have a good one.